Good afternoon or good morning, depending on where you're joining from. We have a great presentation in store. Robert Jones with Left Brain Professionals is here to present Obtaining an Adequate Accounting System. My name is Liz Brigson. I'll be your host today, and my job is just to help you get the most out of the presentation. So we'll cover just a few items before I turn things over to Robert. First of all, you probably have joined us before. If you haven't, welcome. I want to make sure you know where that questions box is. So find the questions box within the GoToWebinar control panel. If you'd like, go ahead and let us know where you're joining from, and we always love to see that you found that and see the interaction out there. Wonderful. Welcome, Michael and Natalie, Kimberly. Excellent. So you can use that questions box throughout the entire webinar to interact with us. There are also the handouts from Robert's presentation. You can download those handouts and save them for future reference. Today's webinar is an hour and a half, so we have 7 poll questions for you. To earn CPE credit, you'll want to respond to a minimum of 5 of those 7 poll questions. And if you qualify, your certificate will be available for you to download from your Incorsa dashboard an hour after the conclusion of the event. If you have any questions at all, you can email us at support@incorsa.com. And with that, it's my pleasure to welcome back Robert Jones. Robert has been presenting with Incorsa since last year, and throughout the course of this year, Robert has put together a really awesome monthly webinar series designed to help educate accountants on government contracts. Robert is a government contract and accounting expert. He has really awesome experience that helps him serve accounting professionals in a very unique way. So Robert has been a defense contracts manager, a controller. He's also led business management, compliance, and operation functions. He has a master's in accountancy from the College of Charleston, and he's an instructor, a speaker, and this time next year we'll be able to also add author. So with that, Robert, it's my pleasure to turn things over to you, and thanks so much for your commitment to this webinar program.
Great. Yeah, thank you. It's always nice to be back here. And as we were just chatting before, we got some sunshine and 90 degrees. So looking forward to soaking up a little more of that this afternoon. All right, for now, we are here to talk about obtaining an adequate, which is the technical term, people call it an approved accounting system for government contractors. Before we get into the topic, just a quick about us at Left Brain Professionals. We know government contract accounting. That's what we do day in, day out. We are a special boutique accounting firm. We serve and work only with government contractors, specialize and practice primarily accounting system design, implementation, and audit support. Some of the tasks that we get involved with are that first one right there, what we're going to talk about today, the SF 1408 survey, or getting through the audit or review for an approved accounting system. Do a lot of work with indirect rates. If you've been with us so far in this 12-part webinar series, we did the cost accounting standards last month. Coming up, we will be talking about unallowable cost, policies and procedures, as well as the incurred cost proposal a little later on this year. A couple of other colleagues that if you interact with us, you may also meet Melissa and Steve at some point. And with that, get in here to our content for today. Our learning objectives, we've got a few of them. The first is that at the end of today's presentation, you should be able to recognize the need for an adequate or an approved accounting system. You should be able to list the criteria for an adequate accounting system, describe the components of an accounting system, explain some of the best practices for successfully passing the survey or audit. With that, we have our first polling question right out of the gate here today. So if you'll kick that off, please, Liz.
Sounds good. All right. So for the first poll, the question is, which best describes your current accounting system? This just helps kind of gather a baseline for your background and what we're going to cover today. So it looks like the questions are coming in quickly. While the audience is answering, Robert, I wanted to also mention that you have Jenny on the line from Left Brain Professionals, and that Jenny will be monitoring the questions box along with me. So we'll definitely make sure we have some time for Q&A, and Jenny will chime in at the end to help us with that. All right, responses are coming in pretty quickly. We want to hit at least 90%, so we'll leave this open for about 5 more seconds here. If you're having any difficulty responding within that GoToWebinar questions box, you can actually shrink it and then try to reselect your answer. That tends to work well, or you can just let me know within the questions box as well. All right, with that, I'm going to go ahead and close the poll down so we can keep on going.
All right, yes, and it looks like 77% said we have an adequate accounting system. So probably should re-ask this question at the end of today's seminar and see if everybody still agrees with their selection here. All right, let's dive into the material. So the first learning objective was to recognize the need for an adequate accounting system. And we've got a few different ones that we're going to go through here. Again, the focus that we've talked about today with adequate accounting systems in this entire series is about government contractors. So if you are participating in the SBIR, which is the Small Business Innovation Research, or the STTR, which this is the Small Business Technology Transfer, if you're participating in either one of those programs and you have a phase 2 award, or you're thinking you're going after the phase 2, it is usually awarded as a cost type contract. And because of that, there is the need to have an adequate accounting system. Throughout the presentation here, you will see some links. You can, when you download the handouts, the links are in there, so you can double check me and make sure that the information that I'm giving you really is accurate. All right, the next up, if you've got cost reimbursable contracts, these include things like a cost plus fixed fee or CPFF contract, a cost plus award fee or a CPAF contract, a cost plus incentive fee, CPIF contract, and then you may have some other type of cost sharing contract or award. Again, so what you're catching here so far is that when you have a cost type award, whether that's a regular government contract or a grant type of award through the SBIR or STTR programs, there is that need for the adequate accounting system. There are a couple of other ones that people don't realize. Time and material contracts. Basically, if there's M involved, if it's not T&M or time and material, then it's really only time. You technically should only have a labor hour contract, so there'd be no material. That wouldn't fall into here. But if you have a time and material contract, in that case, the M or the material is typically reimbursed at cost. That material could actually be materials, some materials maybe that you're purchasing on behalf or providing to the government, maybe as part of installation or something. Can also be travel, is one of the key ones with T&M. And a lot of times if you think about what T&M is, the government is buying services from you, so oftentimes they do have to pay, you have to travel right to where the work is. So there are travel expenses that become part of the M, and those are reimbursed at cost, right? So hopefully what you're noticing there is that cost terminology is coming into play. Another one that's interesting that people often overlook is if you have a fixed price contract with progress payments. Note that this is not performance-based payments. These are progress payments that are based on cost. Again, that cost terminology coming in. And anytime we've got cost stuff, the government basically wants to make sure that you're doing it correctly, right, that it's accurate. And so that's why they have the requirement for the adequate accounting system. There's some other fixed price situations that come into play. If you have a fixed price contract with a prospective or retroactive price redetermination, again, because those types of things are based on cost. Note that what we've been talking about throughout, actually, all of these options occur at the prime and the subcontract level. So sometimes we have people say, well, I'm a subcontractor, these rules don't apply to me. And at a broad stroke, when we're dealing with government contracts, there are some exceptions, but at a broad stroke, when we're dealing with government contracts, many or most of the requirements that apply to a prime contractor also apply to a subcontractor. There are exceptions, but many times those same rules apply. So if you're a subcontractor, stay tuned because this information is still relevant to you. Other fixed price contracts, again, an incentive contract, fixed price incentive where there's a firm target, again, because cost is the factor that's at play there. The other one, this is an interesting conversation that we often have with some clients or potential clients, is they'll say, and actually we get calls, somebody will say, hey, I'm going after this MAC or multiple award contract or a GWAC, a government-wide acquisition contract. A lot of times they're going after these MACs. You know, something like the Seaport contract, for example, is actually an excellent example, where client will call us and say, hey, we're interested in going after Seaport or whatever the other contract is. This says that we have to have an adequate accounting system. Doesn't make any sense to us because all the work that we do is always fixed price, always has been fixed price. It'll always be fixed price in the future. We'll never do anything different. Well, the problem is that because that contract vehicle actually has the ability to award cost type and T&M contracts, awards underneath of it. So it'll have delivery orders or task orders underneath of those contracts. And because those delivery orders or task orders can be, again, either cost type or T&M, because of that, the companies who want to participate still have to have an adequate accounting system. Even if, and we've seen this play out, where they go through the hoops, they get the adequate accounting system, and they still only get fixed price contracts awarded to them because of, again, of the nature of what they do, because the MAC or the GWAC itself can issue those types of awards, then everybody who wants to participate has to meet the same requirements. All right, we've got another polling question here, please, Liz.
I think I heard a couple keywords there. So this question, cost reimbursable contracts include all the following except, and I think I heard you kind of hit this pretty hard, that cost term is pretty key to the discussion, isn't it?
And it is, and if you step back and just think about it, right? If you, I mean, even if you and I, Liz, were going to engage in a contract where you were going to reimburse me or I were going to reimburse you for costs, wouldn't you want some level of comfort that the invoices we're exchanging between us are accurate and that the accounting practices are accurate, right?
Absolutely, absolutely. All right, let's give about 5 more seconds here to have the poll open. And thanks everyone for your responses. Okay. 65% of the audience, I'm just gonna go out on a limb, Robert, and say labor hours the right answer. It looks like about 6%. What would you say?
Yes, labor hour is the correct answer. So the cost reimbursable contracts include all of the following except labor hour contracts.
That's
Very
right.
good. All right, so let's get into the criteria. And this is where we're actually going to go through what's found in the SF 1408. If you're not familiar with the SF 1408, you can Google it. Plenty of copies out there. It's available on the GSA website. It looks like a pretty simple form because you pull it up and you say, wow, there's only 2 pages here. This should be pretty easy to get through, right? Well, in a way it is. And we're going to talk through those items here today. That's the meat of our time together here today. But obviously it's within those individual items that become difficult for companies, right? There's a lot of little tricks, and that's what we want to talk about here today. First and foremost, the first question on there is the system in accordance with GAAP, right? So everything that we do in government contracts, we've talked about this before. I think pretty sure we talked about it in the foundations course. It's come up before when we talked about cost accounting standards. Everything that we do in government contracts is still has to be compliant with GAAP. It's just that when we deal with government contracts, there's that other layer of complexity and compliance, whether you need to comply with full CAS or partial CAS, dealing with FAR 31 and other things that we've have already talked about and we'll talk about in the remainder of this series, at its core, it still has to be compliant with GAAP, right? And so some of the things that included with that are having an accrual-based accounting is a requirement. And one of the easy ways to identify that is when you open up somebody's trial balance, you look at their balance sheet. If they've got things like, accounts payable, accounts receivable that they've got on the books, if they have things like notes payable, salaries payable, other stuff like that, it's evidence, right, that that those books hopefully are in full accrual mode. Sometimes we find that companies do a partial approach, but those kinds of things would give us an indication that they have an accrual-based accounting system. Number 2, and there are several items under number 2 here, does the accounting system provide for first and foremost here is a proper segregation of direct and indirect costs. We've talked about some of this before if you've been on our webinar series so far, so some of this will sound familiar. But direct costs are those costs that are directly attributable to a final cost objective. And a final cost objective can be a contract, a project, a job, could be a specific product or service that you provide. And the government wants to make sure that that you have a way in your system to identify those costs when they come into the door. In addition to direct, we said it has to segregate out indirect costs. So if direct costs were directly attributable to a final cost objective, then indirect costs are those costs that are attributable to a more than one final cost objective. And they end up in our overhead pool or potentially in the G&A pool when there's some type of costs that deal with running the business as a whole. Again, you may recall overhead, we define are those costs that are supporting customers or projects or contracts in general. They're costs that we incur that we can't, that again support those things, but we can't identify to a specific project or contract. And then G&A in comparison are those costs that are necessary to run the business as a whole. And G&A includes those things like HR, IT, accounting, business development, stuff like that. When we look at the proper segregation of direct and indirect costs, you may recall from last month when we talked about the cost accounting standards, we need to consider CAS 402, which is the consistency in the treatment of costs. And so one of the examples that I usually give here is you have a buyer, and many times, and most companies will agree that buyers are indirect in nature, right? They're buying internal supplies, they may be buying materials for IRAD and other things. They're buying materials and supplies for all or various contracts that are going on, right? They may even be buying stuff into a common inventory that's then segregated out separately at a later date. But we generally look at that and treat them as an indirect cost. And then invariably what happens is the company wins a large contract, and all of a sudden this buyer is going to be spending a significant, clearly identifiable portion of their time on this one contract. They're going to be buying stuff for a specific contract. And the owner, it's usually the owner who will say, hey, they're now spending half their time buying specifically for this contract. When they're doing that, I want them to charge direct. But when they're doing all the other buying, I want them to charge indirect. And the answer to that is no, because according to CAS 402, once that cost has been determined to be indirect in nature, it's always indirect. And the nature of buying for one contract versus multiple contracts, while yes, we could all agree that they're spending a significant portion of their time that's clearly identifiable to a specific contract, the nature of the work that they're doing isn't any different. And so we can't treat those costs any differently. Again, just a quick reminder about CAS that we talked about last month. Even if you do not have CAS covered contracts or cost accounting standards, remember for CAS, even if you do not have CAS covered contracts, we still need to look to CAS for general guidance and stuff, much like we look towards GAAP for guidance when we're looking for the proper treatment of transactions. The next item under number 2 is the identification and accumulation of direct costs by contract. Again, the government, in addition to making sure that you segregate direct from indirect, They want to make sure that only the direct costs that are related to their contract or contracts, right, are charged to them. So they want to make sure that when you buy product in, not only can you identify that it's a direct versus an indirect, but that you know exactly which contract that it's going to. And for many things, it's very simple, right? If you're building a large product and you have a build to order type of product that you're doing, whether it's construction of buildings or even, making some kind of a widget, if you're doing, build to order, that's pretty easy because, when you get the order in, you now need to go to your suppliers. At the time that you're issuing those POs to your suppliers, what material you're buying, where it's going. It's easy to code those kinds of things in. You can have common inventory items that do get assigned, and that's okay. You can when you place the original order, it comes in as common inventory. It's not identified to a project at that time, and that's okay. But at the time that you issue that inventory, out of the system and out of the stock room, when somebody submits a ticket and says, I need these other widgets to put together to make this component over here, when those widgets are issued from the inventory, from the stock room, at that point, they need to be identified to that final cost objective. And again, these are direct costs that are incurred for a specific contract. The third item under number 2 is a logical and consistent method for the allocation of indirect costs to intermediate and final cost objective. This is where we use that phrase, a logical causal beneficial relationship, such as when we talk about fringe and W-2 labor. Again, I'm hoping that many of you out there have been with us already in this webinar series. Hopefully you were with us when we went through the fundamentals and the advanced indirect rates. A lot of this may sound repetitive, and it is to a degree. Not to say that you won't learn something here today, but hopefully what you're seeing in this series now is that we gave you building blocks of information, and in fact, what we're doing here today is another building block that we'll build up upon in following topics. But hopefully what you're seeing here today is, okay, you needed to understand those other pieces so that now when you're in a situation where the government says, hey, we're getting ready to award you this cost type contract, we need to make sure that you have an adequate accounting system. And again, the term adequate is what you will find in the regulations, that you have to have an adequate accounting system. Then this is the list of items that they're going to put before you and say, all of the items on this SF 1408, you have to meet. Back here to letter 2C is that logical, consistent method for the allocation of indirect cost to their final cost objective. So we know, for example, indirect costs here are fringe, is one example. And we said that when we talked about fringe before, that we incurred fringe to maintain W-2 employees. So if we're incurring fringe to maintain W-2 employees, then what's a logical causal beneficial relationship in that pool of fringe expenses? What would be the base? W-2 labor, right? All of the W-2 labor. Similarly, when we talk about overhead, and we want to allocate overhead out to the other final cost objectives, the way that we do that, because we typically build, when we build our overhead structure, we allocate overhead over direct labor. So then if I know from a direct labor standpoint, I know which job that went to. So I go, I back up and I can say, okay, when I incurred this labor, I know somebody worked this job. Then when I apply fringe through, right, because I built my fringe rate on direct labor, then my fringe is going to be connected, or I'm sorry, my fringe and my overhead are going to be connected into that job as well. The next item under number 2 is the accumulation of costs under general ledger control. Basically, general ledger control means that the subledgers tie to the general ledger and that we have the appropriate internal controls in place. And there's we could probably build out a whole presentation on talking about internal controls for sure. One of the, hopefully when you think about subledgers here and tying to the general ledger, and the fact of having internal controls. So for example, when somebody creates an invoice in the system, what is the process for that? Who can do it? How do we know that when the invoice is created, that it's put to the subledger for accounts receivable? We make sure that it ties, that the accounts receivable subledger now ties to the general ledger. So those are some of the types of things that we look for in this situation. The next item is timekeeping, and this is big. This is probably one of the biggest things that auditors will dig into as part of the overall SF 1408 survey. And why is that? If you've been with me before, we've probably talked about already, labor is usually the #1 expense of most companies. And when the government is buying products or especially services from you, what are they buying? They're buying labor. So what do they want to know? They want to know that you're doing it correctly and that you have an appropriate timekeeping system in place. And the phrases, the words that you see on the screen here, we've taken directly from the SF 1408. But it says a timekeeping system that identifies the employee's labor by intermediate or final cost objective. That means that when your employees are putting their time on a timesheet, that it's very clear and easy for them to know what job that they're working and where to charge that time. There are some really key requirements around timekeeping. So I'll talk a little bit about that here. One of them is that you need to have a written policy, and we're going to talk about some policies and procedures in general, but you need to have a very specific timekeeping policy. Your employees need to enter their time daily, and that means everybody, and it's a problem for all of us, every client, every place I've ever worked, it's always a problem, but you need to have a policy where employees enter their time daily. The employee actually enters their own time. Okay, so we can't have a situation, we still run into this occasionally where people will, fill out, literally we've seen sometimes they fill out like a little scrap piece of paper and they turn it into some kind of admin person. Sometimes they fill out like an Excel spreadsheet and they turn it into an admin person. If they're not actually filling out their timesheet and signing it, then it's not in compliance with the timekeeping requirements. Your employees actually need to fill out their own timesheet. They need to fill it out daily. They need to sign it and submit it. It needs to be reviewed by their appropriate supervisor. Some organizations, it's reviewed at a couple of levels where it may be reviewed by the project manager as well as the supervisor, because you can have employees who work multiple projects, right, that may be managed by multiple project managers. In that situation, it often makes sense that the supervisor is reviewing to validate and say, yes, I know my employee was here and I know they worked. And by having it reviewed by the project managers, at least for the portion that's of the time that's charged to their projects, then they're validating and acknowledging, yes, that employee worked this time against my job, and I'm approving those charges to be against my job. One of the other requirements is that any changes to the timesheet need to be auditable. There needs to be an audit trail. And in fact, when your employee goes back and makes a change, and errors happen, right? Mistakes happen. That's not what we're concerned about. We're not saying they have to be perfect. We're just saying there needs to be an audit trail for any changes. And part of that audit trail is, again, that the employee is making the change themselves and that there's a way to capture a note as to why the change was made. So when I got started in this industry, actually 17 years ago this week, as a matter of fact, this week is my 17-year anniversary in this crazy game. We were still doing paper, which was fine at the time. There wasn't a requirement. Everybody filled out a paper timesheet. We signed a paper timesheet. It went to our supervisors. That same timesheet was signed by our supervisors. And there'd be times where errors, when it came to data entry for payroll and other stuff, we'd find an error. And so we'd have to go back to the employee and say, you need to, there's an error in your timesheet, you need to fix it. And in those days, it was not whiteout. You were not allowed to get out the good old fashioned whiteout. You took a pen, you lined through, what the change was. You made the change, you initialed the change, and we kept all of those paper documents. If we went through an audit and somebody could pull out the file, they would see Robert entered his time. Here he made that change. You see, he put a line through it, he corrected it, he put a notice to the change, and he initialed the change, and that's sufficient. You know, most of us are doing electronic timekeeping today. We just need to make sure that our electronic timekeeping system offers the same functionality. This is where I will give you a little bit of advice. If you're using one of the payroll company timekeeping systems, it's very likely that that system does not meet the requirements. I've heard that some have made updates, but what we have discovered in the past, and we've worked with many of them, maybe not all of them, but we've worked with many of them over the years, they do not provide the appropriate audit trail and the ability to capture those notes as appropriate for any changes. They're excellent at general timekeeping, but you got to remember that these companies are payroll companies. They're not timekeeping companies. You may think, well, why wouldn't they be one and the same? And why, you know, isn't that why they offer it? Well, yeah, I mean, they offer that tool to aid the process, but these are payroll companies. They're not timekeeping companies. And so if you're using one of those, I'm just going to say you need to check, it may not meet the requirements. There are a number of timesheet companies out there that do provide services that interact with, will connect with most of your major accounting systems, will connect with many of your payroll providers out there, and that do meet the very specific requirements. One of the things that we recommend when you're building out the timekeeping system, and again, we've seen people do this different ways, but we recommend a simplistic approach of actually building jobs across the organization. So meaning that in your accounting system, you have jobs or projects, whatever your system calls them, not only for the direct work that you do, but also for the indirect work. And that way, when your employees go to enter time or expenses, that job structure looks the same in the system, and it's very, again, consistent then and easier for them to know where to charge the time. Some of the examples that you would see in our books and in the books that we create for clients would be a fringe job, an overhead job, a G&A job. Sometimes they may have multiple overhead jobs or multiple G&A jobs, depending on how they want to break it out. But at least having very clear, I know today I worked overhead, I select the overhead job to charge my time. I'll also interject here that one of the issues that you can run into in the future is what they used to call a floor check audit. Now it's called a real-time labor validation, I think, or real-time labor verification. They've changed the name of it. We used to call them floor check audits. This is the one unannounced audit that you will get from DCAA or DCMA. For large companies that have a regular presence of DCAA and DCMA, these are fairly common. For small companies, they can happen, and what I will tell you, my experience is that if you're a relatively small company and you end up going through a floor check audit, it's probably because somebody has called the fraud hotline or filed a False Claims Act against you. These are unannounced audits. The only announcement you'll have is when the receptionist or whoever's working the front desk calls and says DCA is here and they want to talk to you, okay? When they come in, one of the things they're going to do is ask for a list of employees. They're going to randomly select employees. And part of what they're going to do is they're going to say your employees need to bring their timesheets. And if it's electronic, that's okay. They can either print out a version or at least be able to pull it up on a tablet or PC and show them. And one of the things they're looking for is to make sure, is it filled up? So if it's Wednesday, or even like today, so right now it's Tuesday afternoon, technically my timesheet should be filled out at least for Monday and arguably through Tuesday morning since it's now Tuesday afternoon, okay? They're also going to ask a few key questions, and one of those questions is going to be they're looking at the employee, who tells you where to charge your time, right? And that direction should be coming from their supervisor or project manager. Those are some of the key things. Again, I'm spending some time on the slide because this is where we know a lot of companies run into trouble. With that, Liz, we've got a polling question, please.
All right, so this is our third poll question. The accounting system must be in compliance with GAAP True or false? On the topic of timekeeping systems, are there certain systems out there that you're aware of that do comply, or things or systems that you see used more frequently?
There are. I'll give a little bit of a hint to one of the upcoming slides later, and that is be careful when you look at any kind of software, whether it's your core GL or other stuff. Just because a vendor tells you they are DCAA compliant, it really comes down to how you're using the tool. Does the tool have the functionality, and has it been designed and implemented and used correctly? That said, there certainly are some providers out there from a timekeeping perspective. One is T-Sheets. That's the one that we use, the one that we really like. Harvest is another one that can meet those requirements. And there certainly are some others. There are also some specific GL accounting packages that were designed for government contractors. And some of those packages also have built-in timekeeping as well.
Okay, awesome. That's really helpful. And thanks everyone for responding to the poll question. Those responses came in pretty quickly. 80%, wow, this is the true 80-20 rule. 80% of the audience say true.
Yep, the accounting system does need to be in compliance with GAAP. All right, next up, we're going to continue through number 2. As I said, there were a number of items underneath of here. The next is labor distribution. That charges direct and indirect labor to the appropriate cost objective. So what does labor distribution mean? Robert, you just spent a lot of time talking about timekeeping. Well, what's labor distribution and how is that different? So what I will tell you that we often find with new clients, many companies today are very good at timekeeping in general. Even if they don't meet those very strict requirements of the audit traceability and catching some of that stuff, many companies are very good about general timekeeping, right? Because we want to know where we're spending our time, right? The owners, you know, certainly if you're selling billable time, you definitely want to make sure, right, that you're capturing that time. But in general, right, we want to know where our employees are spending their time. And so many companies have a very good timekeeping system. What we find is that we then look in the general ledger and we see one account that says payroll expense or salary expense, and they dump all of that labor into one spot. So, you know, we've been talking about direct, overhead, and G&A primarily, right? If you've been with us, we've talked about having direct labor, overhead labor, G&A labor. And we'll have clients that say, oh, I've got it in the timekeeping system. That's wonderful. But when I look at your general ledger and I see only one account for salary expense, then that means there's no labor dollars that have actually been charged to the overhead pool or the G&A pool. So that's one of the aspects of labor distribution. It's I call it distributing the labor or allocating the labor dollars throughout the GL instead of having it to a single GL account. The other aspect of labor distribution is actually allocating those dollars across the jobs as well, right? So within the direct section of our trial balance or our chart of accounts, yes, we have direct labor, but within direct labor, right, we have a number of direct jobs. So not only do I need to allocate out the dollars between direct, overhead, and G&A, I need to get it across all of those jobs. And when I was talking about indirect jobs a few minutes ago, remember I said that there are times where companies will often set up not just one overhead project in order to track those overhead expenses. Sometimes they'll have multiple, and there are different reasons. We won't get into that today. But there are different reasons why you might have multiple overhead or multiple G&A account projects, I should say. So we need to allocate those dollars across both of those. The next item, this is another interesting one. This is where we should put an interesting polling question. How many of you close your books regularly every month? Now I know that some of the larger companies, right, it's pretty much a requirement, especially when you have external financing, you have external investors. They oftentimes require formal, financial statements monthly. So for larger companies, it's often not a problem. But many small companies that we encounter, they may not have officially closed the books in months, many months, right?
Robert, this might be a fun opportunity to use the
Sure.
raise feature too.
Yeah.
We don't get to use that all that often, but if for anyone who wants to, submit your feedback, you can go ahead and find that raise hand and let us know if you do close your books on a monthly basis.
Yeah, so if you're going to use the raise hand, only raise your hand if you actually close the books every single month, and you're very consistent about that. And Liz, I don't know where I see the raise hand, so I'm going to let you give me the feedback on that in a moment. But
Yeah, so I'm seeing it might take a little bit to here to scroll through, but I'm seeing probably it looks like about 1 in 5, so maybe about
okay,
20 to 25%. So
okay.
thanks everyone for, oh, now it's getting a little more frequent. So I would say about 30%, 30 to 40%, I think.
But still, obviously, it's pretty clear that there are a number of you who are not closing monthly, and there are different reasons. It's not we're not here to poke at anybody. Again, oftentimes with very small businesses, right? It's it might be one owner or family owned, and so it's not as much of a formal requirement. But in order to again get that adequate accounting system determination by the government, you're going to have a process where you're closing the books basically every month, right? We're doing reconciliations, we're making sure all the costs are charged to the appropriate contracts, that the indirects, are in the proper spot. And the only way to do that is to have a formal closing process each and every month.
Probably also mention that there's probably a good number of accounting providers. So don't
True. Yep.
necessarily take that as the rule of thumb. It's
That
representative of the audience, has a mixed background of where they fit as part of their organization's
sure.
accounting teams.
No, that's a valid point, and I bet that I bet that some of the other firms out there, those of you who work for a firm, are probably in agreement with some of your small business clients. You have the same issue, right? That some or even many of your small business clients are not closing those. So yes, good point though. The next item in the requirement is the exclusion of costs charged to government contracts which are not allowable. Again, we have an unallowable presentation coming up where we're going to do a deeper dive into exactly what allowable costs are. Quick reminder here, these are costs that the government has otherwise determined are not required for you to incur in order to do business with the government. So key ones that jump out, alcohol. And I always use the example that if you as a company want to reimburse your employees alcohol when they're on travel, so they work all day, they go out to eat that evening, they decide they want a glass of wine, glass of beer, you decide you want to reimburse them, may or may not be tax deductible. Please talk to your tax CPAs about that. A bunch of rule changes in recent years, be very careful. May or may not be tax deductible, right, folks? But the government says, yes, your employees need to eat while they're on travel, and we will pay for the meal, but they don't need to consume alcohol, so we don't reimburse the alcohol portion. Some other ones are charitable contributions. It's good to give back to the community. It's good to be a good steward, whether you're supporting, truly local, maybe, Little League and some other stuff. We take pride in our organization about giving back to food banks. We make, at the end of the year, we've given several 100,000 equivalent meals through the donations that we make, right? So it's good to be a good partner. But for government contracts, the government says those costs are not allowable. Finance charges or interest charges are another one. So if you have a line of credit, credit card interest, if you've got loans, regular, whether it's a mortgage, whether you got equipment loans, vehicle loans, the interest portion of those is simply not allowable. So when you're going through the SF 1408, they're going to want to see that those things are identified in the system as a whole. And so that means you can have unallowable time. And again, we'll do some deep dive in this when we do the unallowable costs. You could have unallowable time. So there needs to be a way in your timekeeping system for employees to adequately identify that. In your expense reporting, again, if employees are traveling, they're submitting expense reports, there needs to be a way for them to clearly identify the alcohol or any other unallowable expenses as part of their expense report. Your purchasing system, whether you use requisitions in combination with purchase orders or you only use purchase orders, Either way, again, there needs to be a way for the purchasing system to identify these unallowable costs, and you need to have it broken out in your GL account. So these are the types of things that the government is going to look for during this survey. And then last, I've mentioned this when we were doing the indirect rate stuff. Unallowable costs have an effect on the proper rate calculation. We won't do a dive here. If you need it, contact us, go back and look at the previous webinar when we did the advanced indirect rates. On that one, we talked about you have to exclude unallowable costs from the pools themselves, but unallowable costs are in the base of some of those calculations, meaning that the other costs are allocated over them. And because you cannot bill the unallowable cost itself back to the government, you also cannot bill back the associated fringe, overhead, or G&A that's connected to that unallowable cost. And again, that's one of those areas that a lot of companies get the indirect rate calculations wrong. And it's one of those things that auditors know they will find. Just a reminder here, again, we need to look at CAS 405. Even if you don't have CAS covered contracts, CAS 405 gives us this guidance on the proper treatment and calculation of indirect costs. I'm sorry, of unallowable costs. Note that CAS 405 does not get into the individual unallowable costs themselves. Those are addressed in FAR 31 and in your contracts, but CAS 405 deals with the proper calculation and treatment of costs. We also, next item up here, need to be able to identify costs by contract line item or CLIN, or subcontract line item or SLIN, and by units if each unit or line item were a separate, as if it were a separate contract. So many times what we have seen is the government will issue a contract, and I can say this in the past for some of my stuff, especially when they're buying high dollar individual items, which was the case in my past. It's also the case for a couple of our clients. They will have a separate CLIN for each system deliverable. So they may come and buy 5 systems, but when the government is spending maybe $150,000 for a system that they're buying from you, they will oftentimes put 5 CLINs, one per one per line item, because they want to be able to track it. If that's the case, you need to be able to track your costs down to that. I call this really taking job costing to the next level, or to the task level. So you need a system that not only allows you to have jobs or projects, again, whatever your system calls them, but some lower level breakout of that job, whether it's a sub job, sub project, a task, whatever your system calls it. You need another way to indent down and be able to track those costs. All right, Liz, we got another polling question, please.
All right, poll 4. Written policies for unallowable costs include timekeeping, expense reporting, purchasing, or all of the above. We have a couple questions, I think. I'm going to take a quick look to see if we can take one while the audience is responding to this poll. Let's see. Can we use this in the allowable, unallowable presentations for our providers? Can we access these presentations and require our providers to review prior to receiving their award? So I think this is coming in from someone who actually might be in the government contract space, and they're wondering what type of qualifications they can put in place to ask their suppliers to fulfill before receiving their award.
Yeah, I would say contact us offline, because it sounds like this might be a little deeper conversation. At the top level, my response would be that if you are a prime contractor and you're issuing cost type contracts, just like we talked about at the very opening of today's webinar, if you're issuing cost type subcontracts, then you should have the same requirements in there that you would have as a prime contractor from the government. So you should have a requirement that they have an adequate accounting system as well. And we'll put the address up later, but I'll tell you it's support@leftbrainpro.com. And we will have that email address on the screen here in just a little bit.
Sounds good. I typed that into the Q&A box too. All right. Well, thanks everyone for responding to that poll. We'll go ahead and close that down, share the results. 94% say all of the above.
Yes, they're paying attention, which is good.
All
All
right.
right. Continuing on here, segregation of pre-production costs from production costs. Very, very important. The government wants to make sure that you're not charging stuff back to the government that is essentially outside the period of performance. That's one of the ways that we see this. So there are some other potential. If you're actually in a production environment, there may be some pre-production costs that need to be separated. Those may be treated separately. You may have situations where you have what we refer to as long lead items, right, where the government comes to you and says, you know, we want to buy your product. And oftentimes what we found is that you end up in lengthy negotiations on some of these complex products, and you're saying, hey, Mr. Government, the longer you wait to negotiate this contract, right, the longer it's going to take for us to make it, because we can't order the product until, you know, we can't order some of these items until we actually have a contract from you, right? We're not going to go at risk and buy stuff if we don't have a firm commitment from you. Sometimes the government will issue a separate contract for that. Sometimes they'll backdate contracts. They'll do some other things, or at the prime level, whether you're a sub or a prime, whatever the case may be. Again, sometimes what we see is from a period of performance perspective. Again, your contract, whether it's at the prime level or if you're a sub, you have a period of performance. You want to make sure that you're not incurring costs outside that period of performance, because if they are outside the period of performance, right, then you can't bill them on that contract. They don't belong there. Number 3, again, it's kind of odd how the form is broken out in the numbering system here, but number 3, does the accounting system provide financial information? And here says that are required by contract clauses concerning limitation of cost or limitation of funds or the limitation of payments. Again, you can have a T&M contract where where there might be a limitation of funding on it. You can have obviously any of your cost type contracts. They should have these appropriate clauses in there, right? Because there's with a cost type contract, there'd be a limitation of cost that's involved. Look for these clauses in your contracts. These would be other indicators that you need to have an adequate accounting system. And again, we've given you some links here for this. The second part under number 3, does the accounting system provide financial information required to support the request for progress payments? Remember, that was one of the things I mentioned early on. Even a fixed price contract, if you have progress payments, not performance-based payments, but progress payments that are based on cost, then you have to have an adequate accounting system. A little trick here. If you're in a situation where, and let me pause, so let me back up. Progress payments and performance-based payments are types of contract financing that are available. If you're in a situation where you got fixed price contracts and you want to get some type of contract financing, and you don't have an adequate accounting system, and somebody suggests progress payments, say no. Can we structure some performance-based payments? They are different. They are similar. The nice thing about performance-based payments is that hopefully you can identify some clear objectives. That's what the key behind performance is, that you have some clear objectives that you can meet. And when you pass that threshold, meet the objective, then you can submit an invoice and get paid for meeting that milestone, okay? But there is a difference between performance-based payments and progress payments. Because progress payments are based on cost, then you have to have an adequate accounting system. Performance-based payments are based on performance, right? That are objective in nature, and so cost is not a factor, and therefore does not require the adequate accounting system. Is the accounting system and are the records maintained in such a way that they provide adequate and reliable information for follow-on acquisitions, right? If the government issues one contract to you, and they come back later and want to buy more product, either of the same or maybe even a similar type, right? And you go to put together a proposal for the follow-on contract, one of the things that they're going to do, I think we've talked about this some, we're going to have some, I think we'll have this conversation again in one of the upcoming webinars. You know, one of the things you can provide is past relevant information, right? So the government is going to say, hey, if you're proposing, if this is going to be a cost type contract and you're putting together a cost proposal for it, then we want to see, have you, made the similar product or provided similar services, and do you have reports that show that those costs are similar to what you're proposing here? Again, if you step back and think about it, it makes sense. If Liz and I are in working through some kind of agreement because one of us is going to buy, a service from the other one, and I say, well, I've done this before, and Liz says, well, great, do you have something to show me, to prove to me that since I'm going to give you a cost type contract and I'm going to reimburse your costs as you incur them, then I want to know that the proposal you're giving me, right, is correct, right, and is fair. The last question on the survey, and then we're going to get into kind of some best practices and the audit side of this, but the last question that's on the survey is the accounting system currently in full operation? And you might think, well, that seems like an odd question. Wouldn't that be a requirement? Well, the answer is no. Because, and we have run into this with a few clients, particularly some of those that were going after the SBIR or STTR phase 2, what they ran into was that we got everything configured for them, but they were not ready to actually start using all of it because they didn't have a requirement to use it until the contract was actually awarded. And so we configured everything, and so we checked off the box and said, it's all here, and you have to describe, so it's not just a yes or no. Yes, there are yes and no questions on there, but there's, a dialogue portion, and you need to put in and say, when will it be in full operation? And so in those cases, we said, as we were helping the client prepare for the SF 1408, it's ready to go. We'll turn the switch and make it active when we actually receive the reward. Now, that's a case-by-case situation and how you approach that, but that is one of the situations where you might come across that the system is not in full operation at the moment. All right, another polling question here, please.
Okay, this is our 5th poll. Poll 5 is, how often should books be closed and reconciled? And this seems like it ties with our earlier conversation. Earlier we were talking about how often do you close the books, and this question is, how often should they be closed?
And it looks like people are getting it right. So I suppose one of the answers you could argue that I see at least a couple of people put.
Yes, but it looks like we have a pretty overwhelming majority here.
Yep.
So 2 more seconds and I'll close down. We'll take a look at those results. 93% of you say monthly.
Yes, so the requirement here for, again, for what we're talking about today is they should be closed and reconciled monthly, though I'm sure some of you would argue and say, but if you're an SEC filer, you have to do quarterly. Well, that's technically true. I won't argue with that, but not necessarily applicable to what we're talking about here today. All right, let's talk about, so we talked about kind of the requirements of the accounting system. Let's talk about what the actual system is. So some people will say, my accounting system is QuickBooks. And I say, well, that's only partially true. What do you mean that's only partially true? Well, software is really only one portion of your accounting system. Yes, QuickBooks, or again, whether you're using FreshBooks or Xero or Sage or any of the other programs that are out there, yes, that is, it sounds like the system, but it's really only part of your system. The component of your accounting system is software. It's important here in today's world. This is one of the things that make this a little more interesting. And this includes your apps, tools, files, worksheets, calculators, anything else you have. All of that is part of your accounting system. So not only is it your general ledger, in the case of many companies, QuickBooks or QuickBooks Online, but it's also your timekeeping system. Are you using T-Sheets or Harvest or one of the others? It's also your expense reporting. Again, many companies use Expensify or Concur, Harvest, something else that's available out there. Your payroll provider, your payroll, what you're doing is part of your accounting system, right? Many of us, maybe even most of us, do not process payroll anymore, right? We let ADP or Paylocity or Paychex or some other company handle. Gusto, I know, is one that's really taken off, right? There are many other providers out there that actually do the payroll. We just give them hours and dollars, and they give us back a journal entry and some reports, right? But that information goes into our accounting system, right? Labor distribution that we were talking about. I said labor distribution is dollars, right? So we got to have information from the payroll reports to do labor distribution. So that becomes a component of your accounting system. If you've got some kind of indirect rate calculator that's outside of your system, if you're doing something in Excel, if you're doing other work in Excel, right? Those worksheets that are part of monthly reconciliations, those are part of your accounting system. For those of you that participate in, maybe you even perform financial audits, this should be pretty standard, right? All of that is true here, that, you know, somebody comes in and you go through a formal financial audit, they want to know, oh, you've got a workbook to calculate you know, your warranty expense. Okay, that's great. That workbook is now something that we're going to audit, right? And we need to make sure there are internal controls around that workbook. The other big piece, and to me, really, this should be number one, is the policies and procedures. Really, your accounting system is the compilation of your software and policies and procedures. And in fact, it's really your policies and procedures, because it doesn't matter what software you use. It's what you're doing and how you do it, and has it all been configured and designed to meet the appropriate requirements. So with that, we got a couple of myths that we want to talk about here. You'll hear about a DCAA approved accounting system. So the myth is DCAA approves accounting systems, and that's false, okay? DCAA, or any CPA or auditor, simply does the survey. They write up the report, they provide the report to the contracting officer, and it's the contracting officer who actually makes the final determination, not DCAA, not DCMA, or anybody else. Yes, do they do audits? Technically, the SF 1408 is not an audit, it is a survey. It looks and feels like an audit to some people, but it is technically a survey. And again, DCAA is simply writing up a report. It's the contracting officer who actually makes the final determination. Another myth, I can only use DCAA approved software. False. DCAA does not approve any software. I kind of hinted at this earlier. No vendor can claim guaranteed DCAA compliance. In fact, my advice to you, if you're doing research on software or some kind of tool, whether it's timekeeping, expense reporting, whatever the case may be, or even a consultant, if somebody says they guarantee you DCAA compliance, I'm going to tell you to run very, very fast, because they cannot guarantee you DCAA compliance. Yes, there are software packages out there for both at the GL level and at these other levels for timekeeping, expense reporting, and otherwise. Yes, there are other packages out there that are designed for government contractors, that are designed to calculate indirect rates, that are designed to deal with FAR 31 and unallowable costs and job costing and all the stuff that we've talked about today. But if you do not have the proper policies and procedures in place, or you have not configured the system appropriately, or you're not following the appropriate policies and procedures as they are written, then it doesn't matter. You won't pass the audit or the survey, and you won't have an adequate accounting system. Case in point, had a conversation, and I've heard this from others, but I had a specific conversation with a contracting officer who said, I have a contractor who implemented, and I'll leave the company's name out, but they implemented one of the big name, many of you will know, implemented one of the big name accounting software for government contractors and failed their SF 1408. They had spent hundreds, and I say hundreds of thousands of dollars on software and implementation fees, and failed, even though they used software that was designed specifically for government contractors. And the reason they failed is that they had inadequate policies and procedures. The system was not implemented or designed appropriately to meet the requirements, okay? So don't get hung up if you're doing research and you say, oh, this website says they guarantee DCAA compliance. They cannot guarantee it. It's up to the client or the contractor to actually use the policies. The policies and procedures need to be adequately designed, but then they need to be carried out regularly. The fact is, again, no software is guaranteed to be DCAA compliant. That's what I just talked about. Any software can actually be DCAA compliant. We get clients approved with QuickBooks and even with QuickBooks Online. I'll admit that QuickBooks and QuickBooks Online have their shortcomings in some areas, but for very small companies, they're affordable, they're flexible, they're easy to use, and they can be compliant. Yes, there are some other things you have to do, but they can be compliant. It's all in the policies and procedures, the configuration and operation of the system. I think this is number 6 in the polling questions for us, Liz, if I'm keeping count correctly.
Yes, you got it. Let's launch that 6th poll. Which of the following statements is true? Oh, this is one of those, one of the following or a combination questions. So let's.
And the one thing I was gonna say, the one thing I want to add here that I don't think will mess up this question is, the other thing that I tell people is I can actually get you approved with a paper accounting system. Will it be efficient? No, because I mean, so I'll be curious, we should take a raise hands here as well. How many of you used the good old fashioned green bar paper in college? I remember this would have been circa or early to mid 90s. And we had, accounting class, and I had this big green bar paper spread across everywhere in my dorm room. And, and we were running around, okay, we got an invoice. You got to run over here to the sub ledger and the general ledger and all this stuff and do the updates. I could get you approved on paper, but it's obviously not going to be it's not going to be efficient. But I just say that again, that it's back to the policies and procedures and how you actually implement the system.
And I saw some raised hands. Now I'm not sure whose hands were raised from the last question or who raised their hands for the green bar paper. Looks like we have about 90% of the audience has participated. So I'm going to close this down. 73% say both A and B.
That's correct. So no software is guaranteed to be DCA compliant, right? And any software can be, and in fact, again, a paper system could be DCA compliant. All right, let's talk about getting through the survey or the audit. For me, I like to break all audits, doesn't matter what kind of system, whether accounting, any kind of type of compliance, exports. Audits to me are really 3 things, and that is say what you do what you say, and have evidence to prove it. So say what you do simply means having written policies and procedures. They need to be reviewed at least annually. Hopefully you're looking at them more often than that, but at least annually. Take them off the shelf, read through them. A lot happens in a year, right? I mean, we might implement new software, we might implement a new app, we might switch timekeeping software or expense reporting software. We might have a change in a key policy, a treatment, and a type of cost. There's just a lot of things that can happen in a year. So pull those down, update them. Again, say what you do. That's the first step in an audit. Then do what you say, right? You can have work. Some people call them work instructions or desktop instructions. These are great, again, at the software level or the app level, screenshots. This is where you say, go to this screen, go to this field, click, type, select this, drop down box, whatever the case may be. Again, your tools and files, if you've got an indirect rate calculator, you might say, go to QuickBooks, select this report, export the data to Excel, copy the data from here, right? That kind of stuff. All of that is good. Here's the thing that hopefully many of you on this webinar know this already. This is something I have to describe to people who haven't been through an audit. Auditors typically, when they do an audit, right, what's one of the first things we ask for? We always ask for financial statements and stuff. We always ask for a copy of the policies and procedures. The same thing is going to happen here. If you have an SF 1408 survey, government, or if it happens to be a third-party auditor who's going to do it, they're going to contact you, get the financial statements, trial balance, all of that. They're going to get a copy of policy procedures. They're going to read through them to see, are the procedures sufficient in how they're written, right? And then as part of, again, whether it's a survey or an audit, they're going to sit down, oftentimes, right? Today's a little different, but they're typically going to come sit down and they're going to observe. And they usually show up with a blank pad of paper, right? They walk over and they say, okay, you're processing payroll, walk me through what you do. They don't have a copy of the policies and procedures or anything else. They may ask some clarification questions as you go along, but they're going to take notes. Did this person actually pull down the policy and procedure or the work instructions while they were doing it? It's not necessarily a requirement as long as you do what's in there, but they're going to make a note. Did they pull them down and look at them? Then they're going to write down the key steps and the things that you did along the way. And obviously they're going to be looking at things like internal controls, approvals, and such. And then they're going to go back and they're going to compare that to the first part, right? So they're going to, did you do what you say? And they're going to go back and compare that to the written policies and procedures and say, did you follow them? Did they make sense? And then the third piece is have it evidence to prove it, right? This is where we get into that transactional stuff, where they're going to look at, and again, even though the SF 1408 is only a survey, not a formal audit, so they won't do the formal audit planning. It doesn't have to be statistical analysis and all that fun stuff, but they will pull some reports, records and receipts. They'll pull some timesheets, they'll pull expense reports, and they're going to look to see, hey, yeah, you have the policy is good. I observed somebody do some of these things that appeared to what they were doing was correct, but now I want to look at some of the historical transactions and actually validate that they really did do in the past what they said that they were doing, right? One of the things that, and I guess some of this should probably be on the next slide, but when we talk about preparing for this, start early, even before you need an approved system. Even if you're new to government contracts, one of the things that sometimes we'll get a call and a potential client will say, what can we do? We take a bite-sized approach to this. We don't try to shove it all down your throat at once and say, you got to meet all these items all at first or we're not going to work with you. That's not our mentality at all. For some companies, trying to get through all of this is a lot, right? There are a lot of requirements in there. Start working on it, start early. Even if right now you're not even doing cost type contracts, we recommend that you go ahead and start doing it, because many companies, as they grow and they tackle more government contracts and they grow bigger as a government contractor, they eventually need the requirement. And it's a whole lot easier to build little pieces at a time than to try to run through all of them in a very short period of time when all of a sudden you have a pending award and now you got to make it happen. Complete the checklist yourself, right? You can certainly do this. You can gather all the kind of stuff that we've talked about today. You can go through and say, yes, I think I've got all of this. The best, and we are a little biased at this, right? But hire an outsider. Get somebody to come in who can look objectively. Get somebody who knows what they're doing with this stuff, that's familiar with this, and basically have them do the mock audit for you. And that's what we do, is we actually walk through with clients and perform the survey as if we were the government performing the survey. The nice thing is that when we do it, we can still provide the same type of report, but we're there with you and to help you fix it, not just there to grade you on it, right? So yes, you kind of get a grade, because we give you that report and talk about what the deficiencies are, but we can also then help you fix the appropriate things. All right. I think this is our last polling question, and then we'll soon be into some Q&A here.
Perfect timing. So this last poll is mock audits should be performed by who? I definitely like the idea. It's kind of like a mock interview, right? You have someone come in, give you some feedback, but at the end of the day, the stakes are not as high as the real thing. So it sounds like a good idea. How often would you say that your team is helping with mock audits?
Informally, quite often. I mean, as far as when a client will actually hire us to do what I will call a formal mock audit, right? A formal, informal audit. That sounds kind of silly. Formal engagements for those kind of vary, but we're always helping clients through this process. We always are talking about, because as we're working on various things, that it jumps out, right? When you're looking at somebody's indirect rates, it becomes very clear, for example, that hey, they're not properly treating indirect or unallowable costs, right? So that's one of the, we say, hey, in order to get an adequate accounting system, this is one of the things you're going to have to fix.
Well, that makes sense. So we have most of the responses have come in. Do you also see internal accounting departments doing these types of mock audits?
I suppose if you were a large enough company, yeah. So I guess we can talk about kind of the results that we're seeing here. So we're seeing that some of you are saying that an internal accounting department, and they certainly could. I'm not trying to take away from that at all. I will tell you that and we work with a number of small and oftentimes very small companies. So the accounting department might be 1 or 2 people. So typically they're not the ones doing it, and oftentimes they just don't have the expertise. If you're a larger company and actually have, a decent sized accounting department and maybe some other people in the organization with accounting experience, they could certainly do it. The government is not going to do a mock audit for you. It really needs to be somebody else, an outside firm, consultant, a CPA. Again, get somebody who really knows this, that can help you through it. Just a reminder here to finalize all that we've talked about today. There are 15 really key requirements that are addressed in the SF 1408. One of the things that we like to talk about is, yes, it is a requirement in certain situations, but really every company can benefit from this, right? Every time that you can go through this and find little holes in your processes and fix them, it almost always results in improved profitability. I'm not sure that we've ever done something in this area that did not result in some kind of improved profitability. Jenny, if you'll queue up the Q&A, here's down to the last couple of slides. I did say you can contact us. Certainly drop your questions in there today. We've got about 13 minutes according to my clock to go through them. Sometimes questions come up later. You can always email us support@leftbrainpro.com. You can go to our website, leftbrainpro.com. You can access this presentation and a lot of other information. Find us on social media. We do share information out there. And we also have some additional events coming up. In fact, we've got, you see on the slide here, next month we're going to be talking about GovCon accounting policies and procedures, which I mentioned today. We have some self-study courses that we've developed in conjunction with Incoursa that are also available to you. And so if you missed those in the past, there's a little code there for you, LBP15, and you get 15% off. And with that, Jenny, if we can dive into the Q&A, please.
Yep, the first question is there an alternative to a physical signature on the timesheet? Our employees punch in and out on a computer system.
Yep, so that's perfectly fine. Digital time systems, as long as each individual employee is somehow logging in. If you have a kiosk type of approach, which we sometimes see, right, where you have one tablet or one computer, oftentimes in a manufacturing environment, that's okay, as long as either the employee is, scanning a card, or they're using a fingerprint, or they're using a password or something that authenticates that it's otherwise them, right? So they're somehow logging in and entering their time, and the system knows that it really is them, and there's a time and date stamp. So a physical wet signature is not required, as long as, again, there's some type of authentication of the user entering the information.
Our next question, are there exceptions for employees that work on a CONUS site, TDY, where timesheets aren't available on a daily basis?
Sure. One thing is that my first thing is document that. If that's a regular situation for you, please include that in your written policies and procedures, so that your employees know what to do, so that the government knows that you have a policy and procedure for dealing with that. There are also some times where you may have an employee who's out on FMLA or some other type of leave where they're physically unavailable to enter it. Unfortunately, there are times where employees go out on emergency medical leave and may not be there, right? We know they're on medical leave, but it was an emergency situation when they left. Those types of things, the main thing is document, and follow up to get the employee to do it. So typically what we see in the case of like TDY or OCONUS situations, and again, we have some clients that are in that as well, and OCONUS meaning, right, that they're traveling outside the country doing work, may not have access to the system to do it. They may be emailing in their time and somebody's entering it from a payroll perspective and capturing that, and that's fine. Just make sure that when they're actually back, on US soil, in the office, whatever the case may be is appropriate, that they are otherwise logging in or doing something to sign that timesheet and say that it's theirs.
Our next question, do you offer sample accounting policies for government contractors?
Yes, and if you contact us, support@leftbrainpro.com, we actually have a version that we do sell. Does require a little bit of customization, but the primary stuff is there.
Great. Next question. Can allowable costs be represented on the chart of accounts as unallowable cost, or do they have to be detailed as alcohol?
I mean, it doesn't necessarily have to be called alcohol. I will say that for certainly things like charitable contributions, interest and finance charges, those types of things, it's typically because that whole account is going to be unallowable, that we just put that account, and there's some different ways. Some companies will keep that account number in line with others. We recommend, and what you'll see, and we did cover this in the Lay the Foundations course when we talked about the chart of account structure, we prefer that all unallowable costs go in the 9 series so that they're completely segregated. In the case of alcohol, we usually put that in unallowable travel or unallowable meals so that it's part of that, because there can be other situations where you have other unallowable meals and other unallowable travel expenses. The main thing is that there's just a clear way, again, on the expense report for the employee to identify the portion of their receipt that is unallowable, as well as in the GL. With that, I do want to insert as well, we can't stress this enough, you need detailed receipts. The signed credit card receipt is not a receipt, okay? It needs to be the actual register receipt that says hamburger, French fries, Budweiser, whatever they had. It's got to be the listed detail receipt, because, right, we auditors know, you give me a credit card receipt, I don't know what was on it. Yeah, it says you went to Wendy's or McDonald's, and they probably don't sell alcohol, but if you went to TGI Fridays, and TGI Fridays sells lots of alcohol. For all I know, with a credit card receipt, you drank your entire meal. And that's not a judgment, but from this perspective, right, I don't know how much is unallowable. And the problem that you'll run into is if you don't have detailed receipts, auditors will actually disallow the entire expense. So even if only a portion of it, for example, let's say a $10 beer, in comparison to the $25 steak meal, if it's $35 and you don't have a detailed receipt, they can actually just disallow the entire receipt.
Great. Our next question. If I get a contract that requires DCAA compliance, do I have to use the same systems and same policies, procedures on my commercial contracts as well?
The short answer is no, not necessarily. But the problem, so there are a couple of things. One is building and maintaining 2 systems is actually more expensive than trying to maintain 1. So there's the issue around that, and that's true with any kind of compliance. We deal with some other compliance in government contracts. So that's a problem, just trying to maintain 2 systems. The other is that unless you really have 2 distinct operating divisions where you actually have like a commercial division and a government division, and they really operate separately, in that case, it would probably make sense to have 2 different systems and 2 different sets of policies and procedures. But if you really just have one company, one division, and you're doing both government and commercial, you really need a single set of books. And again, part of the reason for that is the government is saying if you're operating as one company, one division, I need to know that I'm paying my share and somebody else is paying their share. And if you're keeping stuff in two separate sets of books, that's going to be difficult to validate.
Our next question, should I look at cloud-based or a locally installed accounting system?
We are big on the cloud for a couple of reasons. It's affordable, it's scalable. It really is safe and secure, folks. A whole separate conversation about cybersecurity is something we are concerned about. We can talk about that separately. But cloud solutions are amazing, right? It's much easier for your accountants and other people to have access to it. I honestly just can't say enough about a cloud solution. If you bring it in-house and put it behind your four walls, obviously some of the things I just talked about become more difficult, because now if you want an accountant or somebody outside the company to have access, then you got to give them a VPN or some other way to get in. You got other things to manage. If you bring that system inside, right, then you got to do your own backups. You got to have backup power supplies and other things for those servers. It gets very expensive trying to maintain, and I'm going to say adequate, not adequate from what we've talked about today, but maintaining an adequate running server and access to it behind your four walls is much more difficult and much more expensive than relying on the cloud.
Next question, how long is the adequacy determination valid?
That's an excellent question, and one I thought about actually as we were going through. I should have put something in here. There's technically no expiration date, and that's actually a bit of a problem, because as with any system, and I kind of hinted at this a little bit when we were talking, you know, if you write the policies and procedures and you put them on the shelf and you don't follow them, it doesn't matter whether you got your approval last week, last month, last year, or 10 years ago. If you're not following the policies and procedures, then that adequacy determination that you got is useless, right? Because you're not doing what you said you were doing as part of the survey. To me, it's a problem that there's no expiration, because companies get too safe and secure. And this really kind of ties back to the opening polling question, where many of you said, yes, we have an adequate accounting system. And I'd be curious, maybe this is another opportunity to take advantage of that raise hands. We're just going to use that like crazy today. How many of you still believe, if you said in the first polling question, yes, we have an adequate accounting system, after what you learned today, how many of you still believe that you actually have an adequate accounting system? Because what we find is that over time, again, policies and procedures change. Whether they're officially updated is a problem, right? So that in itself would probably get you to the point where that you wouldn't pass. But over time, we change software, we change payroll providers, we change timekeeping, expense reporting. Even if we're in the same software, we're usually getting updates, and with updates, we often get new features and functionality, and we say, hey, that's a great tool, let's start using that as part of our monthly close. Well, if that wasn't part of what was validated in how you're doing your books, then right now you're not in compliance. Other key things that happen over time, people change. Right, so the people doing the work, particularly if your key personnel, if you have a controller, a CFO, supervisors, managers in the accounting departments, and what happens when people come and go, right? People bring their own bad habits. Unfortunately, it's true, right? People bring their own bad habits into our workplaces. They may not have been properly trained when they came in. There's just so many factors at play that honestly, what I typically tell people is if your adequacy determination is more than about 2 or 3 years old, it's probably invalid. That's been my experience.
Looking at those raised hands, it looked like about 5 or 6 people had raised their hands to that question you asked a few minutes ago.
Okay. Yeah, so I'm guessing that many of you, again, that said on the first polling question, yes, we have an adequate accounting system, that you probably learned something today and you're sitting there going, maybe that's not so true.
Well, we're really glad everyone joined us. And Robert, do you want to go back to your contact information? So for anyone who did have that reaction that you just highlighted for us. I know that your team is willing to answer questions or be a resource for anyone who wants to dive a little deeper into that.
Yes, definitely get a hold of us, support@leftbrainpro.com.
Wonderful. Well, that was a great round of Q&A. Thanks, Jenny, for helping to facilitate that. Those were some good questions that we had a chance to cover. With that, we're right at 2:30 Eastern time, so I'll just quick give a few reminders. There will be a course survey following the program. We'd love your feedback. That should pop up for you when you close the GoToWebinar control panel. You could log into your Corsa dashboard. You should be able to access your CPE certificate in an hour, as long as you remain logged in and responded to those poll questions. Also, the recording will be available to you from your Corsa dashboard as well. Next month, it's going to be July 14th that Robert will be back presenting on government contract accounting policies and procedures, as he had mentioned. And then we would definitely encourage you to check out those self-study courses. We're really excited that Robert invested the time to put together all of the review questions and the final exam questions to make these live webinars into courses that you and your team can access on demand. So with that, that wraps us up for today, but we're looking forward to next month. And Robert, is there anything you'd like to add before we finish closing today?
No, I'm good. Again, just thank you for the opportunity, and please join us as we continue on in this series.
Thank you. We'll talk to you soon.